Welcome to Kryptolytix, giving you a fresh take on crypto analytics. Today, we're going to talk about yield farming Bitcoin on DeFi. Bitcoin fear and greed index is very low. And you know what they say, it's better to buy into fear and sell into greed. So now's a good time to be accumulating Bitcoin, right? And also, with the Bitcoin dominance up so high, it's definitely a good time to be accumulating BTC and maybe less so on altcoins. Of course, if you have high conviction in a few altcoin plays, then there's nothing wrong with getting into a few of them, but at the end of the day, Bitcoin is king, and we all know this. Bitcoin has survived many bull and bear markets, and to be honest, it's the best thing to accumulate. Bitcoin dominance is reaching levels not seen since October last year. With Bitcoin heading towards some very low levels, fear and greed index hitting very low levels, typically these are great times to be accumulating. Overall, the trend is up. We all know this. If you zoom out, you can see on the logarithmic chart that Bitcoin has been trending up with time. There's no doubt about that. First, let's just cover a couple of things here. Here is a long-term macro chart that I have made. And basically what it shows is just basically a logarithmic regression with some Fibonacci levels, and it's been fit to the most recent data. So the COVID crash through to the Pi cycle top. I've also got another indicator on here that's not as well known called the Pi cycle bottom indicator. And I've also got some lines on here where I'm trying to work out where the two will converge. Because generally speaking, if we look back in history, the Pi cycle bottom indicator has called a lot of the bottoms for the previous bear markets. So it didn't call the COVID crash because that was pretty unnatural, but the 2018 bottom was called very well, and the 2014 bottom was called very well as well. So we'll just scroll back a little bit here. We can see here the Pi cycle bottom indicator called the bottom in 2015. There was a small wick down below, but generally we can see that it was around the right time to be accumulating. This whole range here was a great accumulation range. The Pi cycle bottom is a combination of two moving averages, and when they cross, it puts a flag on the chart. This is a free indicator. You can get this on TradingView. So as we can see here, the Pi cycle bottom indicator called this bottom perfectly as well. Now I've also got Pi cycle top on this chart as well, and that one called this top very well as well, and also the one back in 2017. So what I've got here is I've just got a couple of Elliott waves here, just to kind of work out the general trend. Now what I've also got here is an Elliott wave corrective pattern, or a couple of them, just so I can kind of work out roughly what kind of shape we're in at the moment. And this might not play out necessarily, but I like to look at all these sorts of indicators and kind of work out roughly where we could go. What I've got on here is I've measured a Elliott wave correction with a Fibonacci extension down from this top here to the A wave to the B wave to try and work out roughly where the C wave will be. So basically what I've done to try and work out roughly where the bottom might be, and again, it might not go there. We don't know. Nobody knows. If markets were that efficient, then there would be no money in them. So all we can really do is speculate and have a look at charts and other metrics and try and work out where the best times to accumulate are and wait for the next bull run. If you measure this A, B, and C corrective pattern, what we get here is we get this line down here, which is around $23,000. And what that also corresponds to roughly is the 200-week moving average. So if we have a look over here, 200-week moving average is sitting at around $22,000, with that moving up every week, just a little bit at a time. So with regards to this, I believe that here is a great time to accumulate. Also, here is the Bitcoin risk index, which works very well to basically work out roughly when the best times to accumulate are. So basically you can see here historically selling in this region here. I mean, you didn't call the top, but that's perfectly fine, right? Selling in this region at the top has been historically very good times to take profit. You can also just DCA out during this red zone here once we get above that median line. And then DCAing in generally around here is also pretty good. So we'll DCAing, or then heavily, if you want, you can just build a cash position and then go in a lot harder when we reach these undervalued zones. So you can see we're actually in the undervalued zone right now. So, I mean, it's a good time to be accumulating, right? Between where we are now and maybe this region here, I think are very good times to be accumulating because the upside is pretty great. So, I mean, if we did get down to 22,000, I mean, eventually we would probably go to the top of the band, right? And Bitcoin generally isn't thought of as a high return asset, especially when you're comparing it to altcoins. But I mean, from here to the top, let's just say, is still about 477%. Or even from where we are now, to be perfectly honest, to the top is still about 332%. So, I mean, it's still a great time to be buying. There's no bank, there's no stock, there's nothing that can really compare to this. And Bitcoin has safety as well. Because if the Bitcoin dominance tells us anything, it's like this is a flight to safety. We're in a risk-off environment. You've got soaring inflation, all the macro news with the Fed. So as you can see, I have also some Fibonacci extensions, and I like to measure my Fibonacci extension levels from pi cycle top to pi cycle bottom. I have done it in the past, and as you can see here, if we scroll back, going from here to here actually called the first top of the preceding bull market. So we have the 2020 halving, so that was the start of the next bull run, as you can see quite clearly here. And the top of this particular line here, we can see if we scroll across, there's the 1.618. And if you know anything about Fibonacci levels, 618 is a pretty significant area. So this was basically one of the places where I was aggressively taking profit. Also, we had pi cycle top flag as well. So again, a good time to be taking profit and waiting for the correction. Now, we did get a correction here down to the median line, which was a great time to be buying back. And we did actually form a higher high, but some like myself would call this probably more something like an expanded flat correction in Elliott wave, because if you can have a look here at the risk index, we didn't even get anywhere near as high. And also when you look at RSIs and other on-chain metrics, we were nowhere near a top for that. So arguably we've been in the bear market since April 5th or around this time here. The positive thing about that is if this is part of the bear run, the bear market, then it means we've been in this phase for quite a long time, which is pretty good in the grand scheme of things, because it means that we're already mostly through a lot of the most aggressive part of the bear market. So if we have a look here at this pi cycle bottom convergence prediction, again, these will change every week with every candle that's printed. So it's one of these things where there's no way of knowing exactly where the bottom will be. But with the 200-week moving average sitting around down here and moving up into this range here, and the Elliott wave correction predicting down here as the bottom, and this is measured to the logarithmic scale, because that's mainly what I use to chart crypto rather than linear. And you can do trend-based extensions on the logarithmic scale just by ticking this box here. And the Fibonacci extension tool can be found in this little bar here on the side here. And the way it works is if you want to work out a correction and potentially where it will go, is you measure from the top to the first leg down, then to the next impulse back up, and it will then try and work out roughly where your bottom levels will be, or at least where the next leg down could potentially go. So down here, that's where we have it, and the 200-week moving average comes up around here too. So it doesn't hurt to try and consider these levels as being roughly around the bottom. A couple of other things we can look at is the Bitcoin Investor tool on lookintobitcoin.com. We've got the 2-year MA multiplier. Again, as you can see here, better times to accumulate is when we are in this green zone. So here, and these were good times to take profit. Good time to take profit. Great time to accumulate. Great time to take profit. Great time to accumulate. We didn't quite get up there before. So last year we didn't quite get up to these levels. We approached them, but we didn't get up. And that's probably one of the reasons why it's good to look at multiple indicators and different tools in order to work out roughly where we are in the cycle. Because if you just use this alone, then you probably would not have taken profit, and then you would have been subjected to the Mayday correction while sitting on your hands essentially. But what we have managed to do is we've managed to move into this zone down here. Now this here, ever since we went down below $35,000, is a sign that it's a great time to be accumulating, right? Because we took profit up the top, accumulated down the bottom on this, and then basically here is one of our accumulation zones in preparation for the next bull run. First up, we're going to cover the Solana blockchain. I know it's had some issues with downtime and instability of late, and trust me, I know. I use Mango Markets, and to be honest, the other day when I saw that the TPS was at 0, I was like, okay, we have another outage. But if you use Solana blockchain every day like I do, then you realize that the reason why it goes down is because it's so heavily adopted and used. And the more popular a chain is, the more congestion it can encounter. Let's look at a couple of ways that we can get Bitcoin from our wallet into something like the Solana blockchain and a few other chains as well. Going from native Bitcoin blockchain network, bridging over to some of these other chains to deploy into DeFi. So here we have the REN BTC bridge. So basically what this allows you to do is send BTC from the native Bitcoin blockchain through to any number of these different chains. So in this case, we're going to use Solana, but you can also use it for the Binance Smart Chain, Polygon, Avalanche, Fantom, Ethereum, and Arbitrum. The fees are fairly reasonable, and it does take a while, sometimes a couple of hours, to bridge across. And I know if you're bridging large amounts, then it can get a little bit anxiety-inducing, but don't worry, for the most part, it comes through. I've used this bridge quite a few times, and I can see that it works. I've never used it for an exchange wallet before, so my recommendation is to send it to a wallet, like a blockchain wallet or something like this, whatever wallet you like, and then probably go from there. Basically, the minting process involves you sending BTC to their wallet address that they give you when you go through this process, and then connecting to your Fantom wallet, at least in this case, and claiming those REN BTC tokens back. Once you've done that, the best place to go is Jupiter Aggregator. Jupiter Aggregator is a DEX aggregation tool that finds the best routes between going from one coin to another on the Solana blockchain. As you can see here, you do lose out on a little bit when you convert, say, 1 Bitcoin. So the key here is if you're going to deploy any of your Bitcoin into the Solana network, you should probably leave it there for a while, because you want to recoup some of that back in the form of yield. The first platform I want to cover is the structured options products on the Solana network. Now, friction, the APY that it states here isn't actually what you get. It's a little bit less because there are fees involved in this. And the way these options vaults work is you're collecting what is called the options premiums on a covered call. So what that means is basically, without going into the details, as long as BTC stays below these lines measured on a weekly time frame here, then you collect yield on your Bitcoin. So it's great during a bear market or a sideways market because generally speaking, we're going down, we're not really going up. And basically the great thing about this, it uses what's called European options contracts, which means that even if the price comes up above here, it's not until the end of the week on Friday when the options expire that they can be exercised. So that means, for example, in this case, it was fine because BTC expired out of the money. So basically above is in the money, which is where the vault will incur a loss. There's a number of risks here, like if this platform disappears or if there are some issues and the smart contract is hacked or something along these lines, then you can obviously lose everything. So that definitely is a risk with DeFi, and that's something you should always factor in. So in this case, it's always good to spread your risk, which is why I've deployed my BTC across many different chains and many different platforms. I quite like these options structured products because basically during a bear market or during a sideways market, or even when things are going up to a degree, a lot of the time you can still earn pretty decent yield. Now, Friction isn't exactly the best place to park your BTC. The yield is pretty good. I mean, it's 16.5% APY projected. So there's no guarantee that it'll actually achieve this, but that's what they are projecting. Now, if you've had a look at yields across DeFi and even CeFi, you'll find that 16.5% is well above the average. I'll show you some of the lower APY farms that I would say are probably a bit safer, as you're not going to incur loss from the options expiring in the money. So here's Katana. Katana is the OG structured options product on Solana. Basically, these guys started the whole thing. Now, I think they all use the Psi options to collect premiums, which is a decentralized options exchange on the Solana blockchain. As you can see here, their projected APY is 22.41%. Again, that's not including the loss that will be incurred. So the main strategy with this is during sideways or bearish markets, these are great to use because they won't likely expire in the money. So you can collect those juicy premiums. During a bull market, it's definitely not ideal to be leaving your Bitcoin in these, because often what will probably happen is Bitcoin will go up and then it'll expire in the money and then you'll lose. Bitcoin will go up and then it'll expire in the money and then you'll lose. So you've really got to be on top of this and making sure that you're looking at the trend and seeing, hey, are we in a bear market, bull market? Are we going sideways? What's the condition of the market at the moment, and then acting accordingly. But at the moment, it's perfect. Earning this kind of yield on Bitcoin, again, it's pretty amazing. So one thing to note with regards to these particular platforms is you can actually turn alerts onto your Telegram. So the way to do that on both is you just come in here and you just click on Telegram notifications, and then you just put in your username here and then submit. And then basically what will happen is the end of each options expiry, it will send you a message telling you how much you collected in yield. So you don't necessarily have to come back and check this every week. So as you can see, you have the same icon and it's the exact same functionality. You just basically click this, and then you put in your Telegram user ID, and then basically it sends you a message at the end of each options period telling you what kind of yield you got, which is pretty nice. One thing worth mentioning before I move on is here you can actually see the vault performance. You can see where there was loss, where there was wins. Overall, you can see it's kind of up, and that's probably because of the kind of market condition we're in, where we're going sideways and down. The performance has been pretty good. And remember, these stats generally work for both Katana and for Friction. They have roughly the same expiry prices, and they work both on European option styles. So it's one of those things where you can just come here and have a look and just know that it's kind of going to be the same for Katana as well. And if you want to know what the current options expiry price is, all you have to do is hover over these lines here, and they tell you basically when the options is going to expire. So June 3rd in this case, which was yesterday, and then it will start the new options play shortly thereafter, and we'll give you the new line essentially. And basically that way you know what the price has to get to in order for you to either win or lose, I guess, in this case. Next up, we have honorable mentions to Mango Markets. Now, for those who aren't aware, Mango Markets is a decentralized leverage trading platform, but also has lending and borrowing functionality as well. So it's spot margin. So you can actually collateralize assets. So you pop something like Bitcoin in there, you can earn yield on it. So this is the last 30 days of yield performance. I've seen it get down pretty low before, but at the moment it's pretty good. So we have around, at the moment, 1.6, 1.48%. It does vary, obviously, but we've seen it go up to 2.1% before, and sometimes get even higher. Just really depends on the condition of the market, to be honest, and how many people are actually lending and borrowing at the time. So at the moment it's pretty good, anywhere between 1 to 2%, I suppose, at the moment. So one thing you can do with money markets like this, or this is a money market and a trading platform built in, for one is you can collateralize your BTC, borrow stable coins against it, so USDC in this case, and then deploy them into DeFi. Now the stablecoin yields on Solana aren't amazing, but there's something. And my recommendation is you do not go above 50% loan to value on this. So 50% of your collateral, I wouldn't borrow more than that, because we are in a bear market, so the price could go down. And the thing about money markets is you are at risk of liquidation. So you got to be very careful with this sort of thing, especially during a bear market. So if we have a look over here, the interest on what it costs to borrow USDC, you can see it's gone anywhere between 1.3% to say 0.9, so it's about 1% to borrow against BTC. Be borrowing half of that, so maybe you could half that for all intensive purposes in terms of how much you'll have to be paying back, and obviously you'd be halving the yield as well to work out roughly what the total yield you're earning on your Bitcoin essentially. So what you could do is you could basically borrow 50% stable coins against your collateral, that's Bitcoin, and then go to something like Fantom. Fantom is a leveraged farming platform. Has some pretty cool functionality on the farming side, but I'm not going to cover that in this video. I'm just going to cover the USDC yield that you can get. I would say they're probably one of the better ones because they don't really have any fees, which means that whatever you see is what you get, because there is also Tulip, but they take some performance fee. So it means that you aren't really getting what you see here in the APY section. So say for example, you borrowed against your Bitcoin, about 50%, and then you pop that in here. So that's additional 2% on your Bitcoin, essentially. You will have to pay that back at some stage. But as you can see here, the average 14-day yield was 4.36%, which is pretty nice. So I've seen this go as high as 10, 11, 12% before, sometimes higher. So that's something to consider as well, is that it can go higher than this. This is probably the lower end of the spectrum. Also some pretty good yields on Sol too in Fantom. There are some other things you can do as well, like Saber for example, but that requires regular maintenance, where you basically go into a pool of 2 different stable coins, and then basically what you do is you collect their farming token, which is Saber or SBR, and then you have to sell it off to the market every day. This is low maintenance, so this is probably more of a recommendation, I suppose, than that, but feel free to check out Saber for that sort of thing, but just make sure everything's nice and safe, and you can get this out fast if you need to, so you can then pay the loan back if you do need to. Again, if you're borrowing 50% against your collateral, that's relatively safe, especially with how low down we are price-wise. But if Bitcoin does drop to 22K, you need to make sure that your collateral is safe. Next up, we have the Binance Smart Chain. Now, as you saw before on the REN BTC bridge, you can also bridge to the Binance Smart Chain as well. Or you could also, I guess, buy BTC on Binance if you have a Binance account, and then send it over using the Binance Smart Chain. So basically what we have here is a auto vault compounder. So what this does is it takes yields generated on various DEXs and yield earning platforms, and then auto compounds them. Because a lot of these, what happens is you end up farming some sort of token, some governance token for the most part, and then you have to go onto the platform every day and claim it, and then sell the tokens, and then rebuy the asset. This is just a much easier approach, and you actually earn greater yield this way as well. So with a Kryptos, as you can see here, I've got here Annex selected, earning a pretty decent 4.86% APY. So there are a couple above it. There's one called MDEX, which is earning about 10%, which is very impressive. However, you do have 1/2 of that as USDT. So if you know anything about farming, generally you pair 1/2 with an asset and the other half with a stable coin, or I guess some other asset as well. But for the most part, these are generally the plays that you do. But when you do that, you are subjected to something called impermanent loss. Now that's something worth looking up. If you don't know anything about that, then probably check it out. But what impermanent loss means is half of the value in the pool is in stable coins. So it means if the asset starts to go up in price, it means that you're missing out on half of that value accrual, because half of the pool is in stable coins. So impermanent loss is not a big deal during a sideways or bear market, because it means that you're actually protecting half of the value that you've put in there from the price dropping. But we're just going to go single-sided for now because it's much easier. So yeah, as you can see here, a Kryptos in Annex is earning a pretty decent yield, 4.86%. So on the Binance Smart Chain, that's probably one of the better places to park your Bitcoin. There are a couple of others as well, like Atlantis, for example, or Valus, but I think that Annex probably has the best yield at the moment, so that would be the better one I would say to go to. Next up, we have Tranquil Finance on the Harmony blockchain. Now, I've seen these yields a lot higher than what they are now. Unfortunately, they've kind of dropped off a bit, but when I first got into Tranquil using the 1 BTC, which you can get across on their Bitcoin bridge, which is native to the Harmony blockchain. I saw the yields were almost 10%, but those times have passed. Like all yields, they can get crushed. So if we have a look here, you earn 1.41% on BTC deposit. You also earn Trank tokens, which you can also go and deposit into another pool, which I can show you in a second. And you also get 1 as well from it as well. So you get 1.29% 1 from that. So you're earning 1 and you're earning Bitcoin and also Trank token. Something worth noting with regards to the Trank token is if you do wish to stake it, which it's up to you, it's probably easier just to sell it off. But if you do end up wanting to stake it, you can earn 179% APR on that, and that basically gives you the breakdown of what they supply. And also it's locked, so just keep that in mind. So you can see here it's locked for 6 months, and then progressively it's unlocked, and you can just basically view your upcoming unlocks. So you can see I've got some in here just from liquidity mining essentially, but the price has dropped significantly. It was worth a fair bit more during the bull market, but well, times have changed. So yeah, it might be worth just selling it off into 1 or into Bitcoin or whatever you decide to do. If Bitcoin accumulation is what you want to do, then sell it into Bitcoin, so on and so forth. So this is one option that you have. You do make tiny bits of Bitcoin from that. But again, during a bear market, these sorts of tokens will probably just keep bleeding even more than the rest of the altcoins for the most part, because they're just kind of farm and dump tokens. But yeah, I guess you've got that as an option. If you really want to stake this into this particular farm, then you can earn this stuff through the fees and rewards, but your Trank token will lose value most likely significantly. So that one's completely up to you. So next up, I'm going to talk about waves. Now, waves, there's a bit of controversy around this, and the main thing is because there was a liquidity squeeze. You can actually go into the docs and read more about it. There's a lot of FUD around this chain. I mean, they've been around for a long time, and there's some pretty decent Bitcoin yields on there. And they also do have a native blockchain bridge. As you can see here, you can pop up with the native Bitcoin blockchain, which is pretty nice. And also the cool thing about this platform is you can pay gas in any asset. So any asset that you've got supplied, you can pay gas in essentially. And basically what that means is you don't need waves, you don't need any other asset. You can just have USDC in there or Bitcoin or anything like that. But be careful how much USDC you put in there, because these yields might look pretty tasty, but you actually have you can see a tiny little bit in here, because I just don't like the risk associated to this with regards to putting USDC in here, because there is a limit of how much you can actually pull out of here, because there was a liquidity squeeze where there was some dodgy stuff going on with their Neutrino stablecoin, algorithmic stablecoin, that was the first to have issues well before Terra. This was at the start of the year, where if you look at their peg, it's not really much of a stablecoin anymore, but I think Terra definitely took the cake on that one, so we won't talk about that in this video. So there's a limit to how much you can withdraw. At the moment, I can withdraw all of it, no problems, but depending on how much is pulled from the protocol, depends on how much you can take out. You can see the supply APY is pretty impressive, but that's because there's not enough supply for the demand. So as you can see, I've got a tiny little bit of Bitcoin in here. It's not that much. And basically that's earning right now a pretty impressive 8.15, plus you get that governance token, which you can lock and stake to earn various fees on the protocol. So what I've actually done to get this is I've locked my Bitcoin up in the protocol. And again, this is kind of risky. And also if you want insurance on this, it's all been used. You can't insure this at all. So this is very risky. As you can see, I've only put a small amount in because it is risky, and you need to be risk adjusted with what you do when you are deploying capital into DeFi. So look at this yield on USDN. It's pretty nuts. 91.393%. Like, that's insane on a stable coin. But again, it's not exactly much of a stable coin, so use that at your own peril. But yeah, 91.93%. So you can have a look here at Bitcoin here. So when you go to supply, you can actually lock it up for no lock, which you don't get any extra APR. You can lock 3 months, which you get 1% extra APR. So there's your base level here, 6.72, which is very good, even without locking. And then you can get an additional 1% on top of that, and then or an additional 2 if you lock it up for a year, which would make it an additional 1.72% APR, which is pretty impressive. But yeah, locking into a protocol for a year, even 6 months is really risky. So, you know, again, be risk adjusted. One thing that I don't necessarily like about this platform as well is the gas is pretty expensive. So each transaction costs about $1. So you probably want to not be taking out and putting in this platform all the time, because that will add up pretty fast. And I'm used to the Solana blockchain where I don't have to really pay for gas. Waves itself is gasless, but fees are kind of a necessary evil. Otherwise, you know, where can all these yields and stuff come from, and how do the developers get paid, and all that sort of stuff. So something to consider here is this Virus Finance, which is pretty cool. Also, I guess a honorable mention can go to the Waves exchange, where basically you can earn about 3.05% stake on their platform. You can read here basically the mechanics of it and how it all works. One thing I do like about the Waves blockchain is that whenever they have support, the support's really good. So I had some concerns with regards to Virus. I contacted the support and they got back to me really fast. So yeah, that's the Waves blockchain for single-sided Bitcoin staking. They've also got liquidity pools, but that's probably not ideal, because then you're subjected to potential and permanent loss. And the stablecoin side, well, it's really unreliable. So I don't know if it's really worth this. Base APY is 1.16%, which isn't a great deal when we've seen some better yields elsewhere. In order to get this APY, what you need to do is you need to go and you need to buy this GWX, basically. And the more you have, the more they boost your yield. So I guess if you're willing to do this, which I am not personally, then you can get up to 88%. That's up to you. I don't personally want to do this. I will not do this, but there's some degens out there who want to degen their Bitcoin. I don't know about doing that, because Bitcoin is safe haven. It's a store of value, and risking that, well, I mean, all DeFi is risky, but this is probably pretty far out on the risk curve. If you did do this, probably I wouldn't put more than a few $100 in here, to be perfectly honest, because you also have to buy GWX token, which means you are exposed to price action on that token too, which might just bleed to zero. We don't really know. So yeah, it's worth factoring that in. A couple of others that I thought would be worth a mention, I suppose, would be the Taro supply vault. That's over on the Fantom blockchain. Now, I've seen these yields get pretty high before, somewhere like 6 to 7%. However, at the moment, they're not very good. They were very good during the bull market, but during the bear market, it seems like they've been crushed a fair bit. I think that's probably because a lot of people have left the Fantom blockchain, and you can have a look on DeFi Llama and see that the TVL has dropped quite a bit on Fantom. Maybe the rewards have come down too, so that could be the reason why, but I think it's worth at least keeping an eye on Taro to see maybe if the yields come back. Another one to look at would be Beefy, which is an auto compounding vault, which is cross-chain. So if we have a look over here on Beefy, you can see all of these different chains: Polygon, Avalanche, Harmony, so on and so forth. You can see that it's paused. It means that it's not going to be doing this. So if we could do Scream 54% pretty much APY, that would be pretty amazing, but that's on pause at the moment. And also the Banker Joe one is paused as well. So all we have is Valus and Belt. These are on Binance Smart Chain, and you can see those on Kryptolytix as well. So nothing really that special here, but Beefy is another auto compounding vault. It's pretty good, but at the moment there's not a great deal going on here, so everything else mentioned would probably be a better call. So in the interest of keeping the video short, I haven't gone into methods to bridge across to each chain and get gas. A lot of the time you can acquire gas by buying the token on an exchange like Binance or any other exchange like this, and then basically sending it over to your MetaMask wallet, or for Solana, I guess, from something like FTX to, I suppose, like Fantom wallet or something like this. In terms of Waves, you don't need to do anything like that, because it does use the Kepler wallet, and you can use Bitcoin for gas. So you can use Bitcoin for gas, and then you can swap USDC if you wish on the Waves exchange, and then basically use that for gas. Or alternatively, you can actually bridge from the Binance Smart Chain to Waves. So that's pretty cool as well. So that pretty much ties up the video. If you have any questions, please feel free to ask in the comment section down below. If I get quite a few comments on any particular platform that I've covered here, then I'll happily make another video that just basically dives deeper into that particular platform. But I hope I've covered everything, and that pretty much wraps it up. So I hope you enjoyed the video. Peace.